Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Eicher. Well, after touching record highs, there's a massive profit booking that's taking place. We are off around 160 points from the highs of the day on the Nifty. Midcaps in the red. Banks too have fallen. The PSU banking index putting some pressure. So a lot to talk about. But yes, we have seen all the rally being sold into, and that is key to track.
That's right. Good afternoon. And extreme volatility, especially as far as the markets are concerned. What we're actually seeing is the advance decline ratio breadth is something that has deteriorated quite rapidly as far as the second half is concerned. But we have a lot lined up on the show, so let's start off with the top headlines. Benchmark indices off morning highs after hitting fresh record levels. Energy, realty and PSU banks trade lower while financials surge. Mid-caps relatively underperform.
Whirlpool is under pressure after a large block deal as over 11% equity worth over 1,600 crore rupees changes hands. Sources tell us that the promoter entity is the likely seller in the block today.
Car trade tech shares slip after around 5% in trade after the company announces that the proposed acquisition of its rival Cardeco will not materialize as both sides agree to mutually call off talks.
GMDC shares surge in trade. Another 8% rally today after 8% yesterday as the centre approves a 7,280 crore rupee incentive program for rare earth magnets, intensifying the country's push to build domestic capacity and reduce dependence on China. Okay, those are the top headlines. The mid-caps, the advance decline ratio when we started the trading day was in favor of advances. Now it has turned for the worse. And this is something that we were highlighting as well, that the market breadth, that has been under pressure for quite some time now. And those lines have converged. In fact, now there are more declines versus advances in trade. The small cap index too is lower in trade today. And across the board, there is some profit booking which is on the cards. But, a lot of other stocks which are on our radar. This is our special segment, Mid-Cap Movers. We have Ria to take us to the mid-caps that are moving around in trade. Ria.
Well, yes, starting off with the gainers first, we have GMDC up 8% today after the Union Cabinet approved a rupees 7,280 crore incentive program for rare earth magnets. The stock is also up roughly 22% in the last 3 sessions as well. Tejas Networks also up around 6% today. Even Ashok Leyland up around 6% today to hit a 52-week high today. This is also on the proposed merger of the finance arm of the company with NDL Ventures. Gillette also seeing gains of roughly 4%. And Dr. Agarwal's Health also up roughly 3 to 4% today and also up 8% in the last 5 sessions. On the losing side today, we have Whirlpool down more than 10% today after its promoter has sold nearly 11% stake in the company and they have upsized their initial offer from the initially indicated 7.5%. We also have Natco Pharma down nearly 5% today. Canes also down roughly around 4% today and down 17% in the last 1 month as well. Even Motilal Financial Services seeing a cut of roughly 4% today and down 12% in the last 1 month. And at the end, we also have GE Vernova down roughly 3% today.
Well, thank you so much, Ria, for joining in and giving us all of the stocks in the broader end of the markets that are making all the moves. But it's a good time to welcome independent research analyst Brijesh Bhatia for a quick technical check on the market. Good afternoon, Brijesh. Very tough, and we know it's a tricky question to ask you. But do you feel Nifty maybe has made a top-out pattern? Do you see further selling pressure, or do you feel we can make a recovery?
Hi, I don't think there is a topping pattern as of now because yes, the large caps have been few pocket has been roaring onto the market. We saw with IT, SBI, Reliance, L&T. I still believe 26,000 has been convincingly held. On expiry day, we saw 25,800 being strongly held. So till 25,800 is not taken out on the Nifty, I still believe there is a huge room towards 26,500, 26,600 levels onto the upside. Any dip towards 26,049 to 26,083 on the spot is a good level to look for a long opportunity.
Any individual names that you have on your radar, Brijesh?
On the mid-cap side, I think those stocks which are continuously outperforming in the current November series have seen a strong holding as of now also. Cummins India is the one which I think is a strong one we should look at. Two things are happening. First, though it was a long consolidation after a strong rally, bullish head and shoulder onto the hourly chart, indicating there is a strong momentum on the stock. Buy at around 44.20, 44.30. Target could be around 46.50 onto the upside and keeping a stop loss of 43.50 onto the downside. And my second pick will be M&M Financial Services. So if you look at the whole structure, we saw a strong rally between 2020 to 2023. Stock went into a strong rectangle structure. And importantly, if you look at the Fibonacci time cycle, it gave breakout right at around 127 week, which is a strong sign of a bullish trend. And now the trend assumption is that we have seen at 328 to 350, 360 level has been strongly held in current market as well. When markets see a profit booking, M&M is holding strong. So buy at around 358, 59, keep a stop loss of 345, and look at around 390, 395 onto the upside.
Well, thank you so much, Brijesh, for joining us, giving us a view on the markets as well as your individual trading calls. Well, we now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Well, the market breadth continues to deteriorate. After hitting lifetime highs, we've cooled off significantly. The Nifty now near the day's lowest point. What's actually dragging the market lower, especially in the last hour of the session? It's some of the large banking names, heavyweights as far as the Bank Nifty are concerned. Have a look at SBI, that particular stock near the day's lowest point. Even a name like Axis Bank is dragging the Bank Nifty and along with it the Nifty lower as well. And a sector that did very well in the session yesterday was the Nifty Metal. But today, if you look at most of the constituents over there, a name like Welspun Corp, a name like JSPL, SAIL, all of these stocks under a bit of pressure as well. Another stock from the cement pack, that is Ultratech Cement, that particular stock too has now gone ahead, hit the day's lowest point. But like we promised, it's now time to speak to an important corporate guest. Rajesh Sharma, the MD of KP Global, joins us now. Mr. Sharma, thank you so much for joining us. Q2 was quite strong for you. In fact, it was so good that you managed to go ahead and increase your AUM guidance for FY26, implying an 18% growth in the second quarter. Which segment are you currently seeing the growth coming from?
Yes, thank you. So growth is coming from all the segment, but more of the gold loan because you added more branches. If you see, last quarter we added about 86 branches, and gold has become almost about 40% of the overall AUM. Now, gold specific branches about 850. So with those branches, I think gold is growing, and further there is a cultural shift. Borrowing against from the gold is now getting more popularized and more acceptable, where in the semi-urban rural area, people don't hesitate to meet their short-term requirement from the gold. If you talk about MSME segment, that has also reasonably growing. Affordable housing, because of the push of the Pradhan Mantri Awas Yojana again, the demand we are seeing clearly, that segment is also growing. We grow almost 35% year on year in that segment also. So overall, it has been a very good quarter, and the joy has come from increasing our margins, and we have declared all-time profit after tax, which is about 236 crore.
Mr. Sharma, when you speak about how gold loans have now become 40% of your total AUM, do you expect it to remain at those levels? What kind of growth levels are you looking at here? And RBI has now eased the norms, right? So how much of the gold portfolio falls under that 2.5 lakh rupee ticket size? If you can give us some numbers there.
So the portfolio about 2.5 lakh rupees will be about less than 30%. Majority of the portfolio sits between 1,25,000 and 2.5 lakh rupees. And that also because in recently last 2 years, gold loan prices almost have doubled. So the ticket size have gone up only also because of that. The gold loan prices have seen a run in last 2 years, almost 100% jump have come. So we see that if gold loan prices keep pushing like this, I think more portfolios start shifting from beyond 2.5 lakh rupees, where we have to assess the income and underwriting of the borrowers.
Understood that. The other part of the P&L that we were looking at is the other income portion. It's growing at a strong pace, doubled on a year-on-year basis. Co-lending is something that has clearly aided you. Going forward, what will be the ideal mix for you? Do you feel as a proportion of the total income, co-lending will continue to grow higher?
So in the total income, there are various fee segments. There is income from sale of the insurance policy to our borrowers. There is a car loan which we sell for our third party product, being about 12 partner banks, where we sell. Last year we sold about 1 lakh car loan and generated a gross fee income about 240 crore rupees, a significant amount of income. So it's a huge focus that how do we deliver a ROE between 2 to 2.5% purely from the fee income, and that also differentiate others from our competition. So their fee income include car loan distribution income, insurance distribution income, and co-lending income. As regards co-lending, about 20% AUM sits in the lending is a very wonderful product where the low cost fund of the bank and collection efficiency and underwriting capability and the reach in the rural segment of the NBFC do collaborate with the lender, and ultimately customer also benefit. As far as the company is concerned, we need not to provide any capital for that.
Got it. Mr. Sharma, you briefly spoke about MSMEs as well. Just want to understand, is there any pressure point? Are there any pressure points that you are seeing in that particular space? Because that has been a concern, right, for lenders generally. Your credit cost, you said you'll remain at 90 basis points this year. Do you stick to that? If you can give us some more idea on what are the constituents that you're looking at to keep that credit cost at those levels?
So while generally speaking, this MSME segment in the unsecured have shown a lot of stress. And if you talk about the collateralized segment, in some pocket, in some profile where the tariff have caused those exports slowing down in the textile hub or the gems and jewelry and other aspects, in those clusters we have seen some stress going up. But barring that, in the collateralized segment, especially in the segment ticket size of 20 lakh rupees, we are not seeing much in, barring those clusters I mentioned are affected due to the exports is slowing down.
Understood that. So in terms of NIMs as well as ROAs, what is it that we should aspire for by the end of FY26 and FY27? How is it looking?
So 27 definitely ROE we are targeting not less than 4%, and which is visible. If you look at the quarter specific, our ROE had touched in that June. And despite the large amount of capital have come by way of QIP, we are able to reach a ROE in the range of about 15%. And I think next year will be much better. We should be able to target a ROE in the range of about 16.5 to 17% and overall ROE in the range of 4% plus.
Okay, Mr. Sharma, a lot more questions, but completely out of time today. But it was a pleasure speaking with you today on the quarter gone by, but most importantly, the outlook going forward for the company. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the market, stock-specific action, and get our mid-cap spotlight stock as well. Welcome back. You're still tuned in to Mid-Cap Radar. This is our special segment, Mid-Cap Spotlight. Rachna is joining us now with all the updates coming in from Car Trade Tech. That stock is lower in trade today. Rachna, tell us more.
Now, this is a significant development in the consolidation story we've been tracking in the digital auto space. Car Trade Tech has issued a formal exchange filing providing clarity on its discussions with Girnar Software. Now, the deal won't be moving forward. Now, Girnar Software is the parent company of Car Dekho and Bike Dekho. Now, if you remember, on November 11th, the company had confirmed that it was in preliminary talks for a potential consolidation of their automotive class of fields business in India. And this was first reported by us a day before that, and the company later confirmed it. But now, if you look back at it, had this deal gone through, it would have brought together two of the largest online auto marketplace players in the country, and it could have created India's biggest auto tech platform. And there was good reason for that. Car Dekho's new auto business, which includes Car Dekho, Zig Wheels, Bike Dekho and Power Drift, are estimated to have generated around 3,000 crore rupees in FY25, revenue at 33% EBITDA margin. That's growing to nearly 3,700 crore in FY26. The group also fully owns its auto lending arm Rupee and holds majority stakes in Insurance Dekho and OTO, giving it a much wider financial services footprint in the mobility ecosystem. For Car Trade, analysts said that the rationale was scale, synergies, and pricing power. The two platforms together command nearly 20% of India's digital auto advertising pool. That's according to JM Financial estimates. And based on the valuation math that was laid out in the same JM Financial report, Cardeco's new auto vertical alone could have been valued at around 61,000 crore rupees, making this one of the largest consolidation moves in India's consumer internet space. But all of that now is on pause. Cartrade Tech has said that both the parties have mutually agreed not to proceed with the proposed transaction, and at this stage, the company has stated clearly that the discussions have ended without an agreement. This brings down the curtain, at least for now, on what could have been one of the most consequential combinations in the sector.
Well, that's right, Rachna, in a story that we're on top of. But now the management has decided not to go ahead. It'll be interesting to see, in the next conference call what exactly they say in terms of what made them drop this particular acquisition, given the kind of synergy benefits it would have brought about. Well, a smidge of a recovery in some select stocks across the broader end of the markets. Names like Delivery trading near the day's highest point. LTI Mindtree, that particular stock is doing quite well. IDFC First Bank, that particular stock has now surged and is now near the day's highest point. A quick up move on that particular name. Cummins India, another name our technical analyst on the show had said was looking quite strong on the chart. That particular stock too has now moved and up over 1% in the session. But the broader end of the markets continue to witness significant selling pressure. And if you look at the advanced decline ratio from the time we started the day off, it's deteriorated quite significantly and well in favor of the declines is what the advanced decline ratio currently is at. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.